Go to the news on October 14th, 2007, and see if you can notice anything meaningful about that date. I'll spare you a couple of hours. There's nothing. There's nothing important that happened in the news on October 14th, 2007. But that was the day that the world went from more buyers than sellers to more sellers than buyers.
Today, I'm sharing with you a conversation with my good friend and mentor, Alastair Macdonald. For those who have not met Alastair, he is quite the Renaissance man. From his early beginnings as a safari guide in Africa to a very successful career on Wall Street, he more recently built and sold a massively successful private practice and today devotes much of his time to helping doctors do the same. Our conversation centered around mining our own experience as a pathway to impact and relevance, navigating the journey from student to practitioner to master to teacher, how interest rate hikes are causing a major credit contraction and where this creates opportunity for investors, the outlook for private equity in dentistry, where the trends are headed. Alastair has an amazing ability to find signal amidst the noise. He is not afraid to contradict the general consensus, whether in dentistry or the financial markets. He can find trends in mountains of analysis and data, and he pairs those observations with a wisdom that comes from a lifetime of mining his own experiences. After our interview, I'll return to share a few thoughts on some of the topics that came up in our conversation. But for now, please sit back and enjoy my conversation with Mr. Alastair J. Macdonald. And looking at the emotional aspects of the market, as you talked about, we have those that are younger that are seeking to ascribe to where do I fit in? How do I get some traction into this uncertain environment? What's your message to those in that younger generation? Speak to that group first, next gen that are here in the room. What's the advice you would give them?
Well, I certainly can't speak to my kids because they're so sick of this bilge. They don't want to hear anything else from Dad. I think that the challenge that lies ahead is the same for all generations, which is really the number one job in business, in entrepreneurship, is actually the same as the number one job in parenting, which is to be relevant, to stay relevant. That's what our job is, to stay relevant. You're relevant to this patient's needs. You're relevant to this employee's needs. We're relevant to the marketplace, which is to say being useful. And my recommendation would be to find individuals that have the most complicated problems and figure out how to solve them. Because the more complicated they are, the more valuable they are to solve. And the beauty of it is that there are likely to be problems in multiple domains, many of which you have a real interest in. If you have an interest in it, and you can shine a light when others are in the dark, the world will beat a path to your door.
So kind of the same question, but to those who have left active participation in their models, there's always a next. For those who have been vibrant in their own life, their own right, it doesn't end because you decide to hang up the handpiece. It shouldn't end. So what could we seed for those who are at that point, transitioning out, thinking about life on the other side, but still wanting to be very much with their hands on the controls to the extent we can with their own lives and shepherding their now capital base, not within a practice, but now out into the world. What can they do to remain relevant? How would you speak to them? They all have the story. They all have something to give back. It's just going to be not with a handpiece in their hand necessarily.
Yeah. In Zulu, which is the culture that I grew up in, we have a saying that when an old man dies, a library burns. So culturally, your elders are the source of all wisdom. And it's up to you whether or not to extract it. And so the corollary to that is, it's been my own journey and my observation that through our lives, in different domains at different times, we move through different tiers, from student to practitioner to master to teacher. And I believe that there's those individuals that you're describing. I think of Ed, I think of Jeff. They are at that teacher level. Excuse me. It would be a crime to think that because your magic has been delivered to the world through your hands, that is the extent of it. When you get to the point that you know as much as some of these friends of mine and others in the room, when you have that much value, it would be a crime for it to die in your chest, as they say. It would really be a shame. The world is crying out for the wisdom of the ages. And I think that is why, we live today in a society where people get elderly, we put them in homes on the other side of the country, we box them up in chicken coops and don't really look back. In Africa, your parents are your parents your whole life. In Zulu culture, it is the privilege. The translation from Zulu is, it is the oldest son's privilege to take care of his parents. And I am the only son, so that's my privilege, and it is a privilege. And if I ever need any sort of insights or reflection, they'll come from my parents. And that's the wisdom that's trapped inside the hands and hearts and minds of many people that should be mentoring. The world needs your wisdom. You can fold time for others. You know exactly what they're going to be tempted to do because you did the same stupid stuff. And you can spare them that.
Everybody's talking about, well, I think they're going to cut rates. They'll cut rates and then it'll all be good and we'll get the soft landing, and provide some insight into that error in thinking and why, to me, and I think to you, that is irrelevant and noise that I don't even pay attention to.
Yeah, I understand that only about 14% or less than 14% of mortgages are over 6%. That's a tiny amount. There's a couple of things that are going on. The one is that would be helpful for banks. That would be great for banks because banks, of course, are in the business of borrowing money short-term and lending it long-term. That's what they do. They take your deposit for the week and they turn it into a 30-year mortgage. And the issue is we've got an inverted yield curve, meaning that they're having to pay you 5% for that money, but then they're only going to get paid 6% for a mortgage or what have you. In the case of long bonds, they'll put them out in long bonds, so they're borrowing from you at 5.5 and buying the 10-year bond at 4.35. This is terrible. So if the longer this continues, the more there's going to be sand in the gears for the entire lending institution. Credit will contract, as it already has. Big Mike and I were talking about it in a number of sectors. So this is sand in the gears of the economy. Banks right now are sitting on $468 billion of unrealized losses. They're just sitting on the books. This is further evidence when you're that upside down, you're in no position to lend. So what this means is there's likely to be a booming opportunity in the next half cycle for those that do have capital that can do private lending. That's one of the things I would expect. But the idea that the Fed lowering rates is absolutely going to bring down mortgages, it's got a long way to go to make it meaningful, from 6.75 to 3 or 3.25. It's a long way to go. It's a bold assumption. Equally, remember that those that have borrowed money to buy practices, DSOs, have done so using capital of several years ago. They don't just start up a private equity group and say, okay, great, we've got $1 billion to spend this week. No. It takes years to start gathering a pool of capital, meaning that their average borrowing rate is about 3 or 4%. But now the market is charging 7%. Why would they refinance? Who's going to take that off their hands? For this reason, I'm concerned about recaps. I very bearish. If they happen, bonus. Can I just point out one more thing? Sure. It's a hobby horse of mine about DSOs. Having sold to them myself, the difference between speculation and investment is the difference between investing and trading. If your practice has been purchased and been resold, or if you're considering selling your practice under the premise that it be resold, what we have to believe is that right now, this particular genius sees your genius and will pay you 5 times. But there is an idiot down the road that is magically going to show up in 3 years' time that's going to pay 12 times. Apparently that idiot is on a pause and on ice for the next few years. They're not allowed to know about this secret opportunity in this private industry called dentistry. And by the way, you need to stick around for 5 years. It's one thing to have your practice traded, but if you have a tie-up agreement for 3 to 5 years, you are being traded. You are being traded. This is extremely important because what I'm seeing is really good, hardworking people that have built beautiful assets that represents the bulk of their net worth, and they're just pushing it all on black. Completely seduced by these incredible people called private equity. You have to really suspend all of your wisdom as an investor and business owner to believe this. By the way, if I would, last point, sorry, I'll shut up. I keep saying
No.
He has to deal with this all the time. If I said to you, I've got a system, here's what we're going to do. You give me this thing, I'll give you $100. But I'm not going to give you 100, I'll give you 50 for now. But as soon as I find someone else to pay 100, 120, I'll keep 20 and give you the 100. We know this. It's called a DSO. But we also know it because it was first invented in 1919 by a man named Charles Ponzi. That is the definition of a Ponzi scheme. I'm going to give you 50 cents now, but as soon as I find some fool to give me $1.20, I'm going to take 20 cents and give you the full dollar back. Stick around. Works perfectly until it doesn't. So Ponzi scheme can be very profitable provided you're early on in the cycle. We're not early at all. I really want to be wrong about this. I really want to be. There's no upside for me saying this. There's none. Only risk to me. I want to be wrong. And if I am, let me know. Because there's something I'm missing.
Is your retirement plan on pace to get you to where you want to go in the time you want to get there? How do you know? Whose advice are you taking? And more importantly, what measurables or metrics are you using to measure your progress? I learned many, many years ago to depend upon myself for creating my financial future, my financial freedom. And I started out with tangible assets. Not unlike our own businesses, our practices, but having a plan B that at some point would replace the income that I had to earn to pay for my lifestyle, my family security. It takes some time to do that, but converting your investable capital into tangible assets, I believe the time is now more than ever. The financial models of the past, the traditional tax-deferred programs like 401ks and cash balance plans, defined benefit programs, that's not going to be the way of the future. You might have some money there, but really hard assets is where you need to be to offset the inflation and have the predictability of the income that you need to provide the security that you need for the rest of your life. I'm hosting a webinar next Thursday, August 1st, where I will break open the principles that I've used for many, many years to build my own freedom and helping many other professional practice owners and their spouses as couples to create the same freedom and have the same peace of mind and security that everybody's looking for today. If you'd like to know more about how to do this and how I can help you, just join me on the webinar next Thursday, August 1st. I'll be glad to open the door and show you the principles and the strategies and even the tactics that we're using today to offset the volatility of the economics and political environment that we find ourselves.
So let's end this way. Alastair, what could we leave our audience with, our members, our participants, our guests, our next gen? What can we leave them with to utilize their capabilities, their desire to remain vigilant on their own frontiers, to remain proximate to their opportunity to navigate what's coming, not abdicate, as none here have done with their own businesses, but certainly talking about their capital and what they want to do with that. What can we leave them with in terms of some filters, some of the principles that you outlined that could make for some relevant discussions here today? What would you want to leave them with to take back today, right now, to take away from your excellent presentation that would be helpful and beneficial?
I think mining our own experience is the most valuable thing we can do, and we don't do it. With my private group, once a quarter we take a week off called an integration week, and the charge is to step away from all external inputs, including my own, and to spend more, no podcasts, no audiobooks, no gurus, no experts, just you and a journal. You and a journal. And a 20-minute walk without a phone every day. And allow those insights to percolate through from your own experience. Nobody is more in touch with your skills, capability, resources, history, journey, qualifications, network than you. But we subordinate our own experience and throw it down at the heels and hands of experts. We don't know what to do. When we don't know what to do, it's because we're not in touch with what we actually think. We're buried with what everyone else is doing and what they suggest. There is a gold mine of experience in you, especially if you spent 10, 20, 30 years running a business. You know so much more than the average expert, and I mean it. We're in an era right now where people are experts on building businesses, but their actual business is building a business, telling people how to be experts on building a business. I mean, the snake has eaten its tail. This is where we are in the cycle. What I'm getting at is This is the time for wisdom. It's the time for wisdom, not novelty. Wisdom, and it's trapped inside your experience, and I believe it should be extracted. This means go back and think about the investments you did that really, really kicked you, and the ones that worked out well. Think about the things that were pitched to you over your cycle. Think about when that nephew of yours wanted to start the meadery. Think about when it was that you first made your first speculation, and then pull up a chart of the S&P 500 for the last 30 years and track your experience according to the collective zeitgeist, as reflected by the boom-bust cycle. And you will see a lived PhD in your own experience. Think about that time that your friend decided to go all in on fill in the blank, that you decided whether or not to buy that beach house. Pull up the Case-Shiller Index. When did I choose to do that? Prepare to be thoroughly underwhelmed by your skill set. Maybe that's just me. It's haunting how much we are at the whim of the broader herding instinct. When things are going great, they're going to be even better. When things are going terribly, this is just the beginning. It's going to be worse. I think that's a useful exercise. In 2005, I, like many people, was fully invested in real estate. And I started to get a sense that everybody was in agreement on the same thing. So by late 2005, I started wondering, is it possible that this could be a bubble? But I couldn't find anybody to agree with me. So I reached out to the only famous bear on Wall Street, Dr. Mark Faber, author of the monthly newsletter called the Gloom, Boom, and Doom Report. Seems like he's qualified. I got a copy of his email and I wrote it to him, Dr. Faber, I am this guy, what have you, and I've got these properties, but everywhere I look, people are loading up on property. All these friends that are suddenly mortgage brokers. Everyone's fixing and flipping, et cetera, et cetera. By this time, it was late 2005, early 2006. I thought there has to be the most bearish person on earth will be the one to spot it. And he wrote back to me. And he said, Alastair, listen, yes, it's a bubble. But the problem is the US dollar is going to go into the toilet and hard assets are going to thrive. So I wouldn't sell those properties that you own. At the time, I was under contract. I owned rental properties, duplex and rental properties in Colorado, but I was living in Portland, Maine. I was under contract to buy this penthouse apartment, nothing too ridiculous, overlooking the old harbor, if any of you know Portland, Maine. There were 5 offers waiting behind ours. And he said, yes. It's a bubble, but the dollar's going to implode, and so there's no point selling that property. I closed my laptop and I took a walk, Saturday morning. We'll never forget this. And I had one of the most powerful insights, which is, here it is. Here is the individual, the most famous bear on earth, still agrees with owning property. He might come to it through a completely different intellectual path, justification of, the dollar's going to go in the toilet, etc. But he was still bullish on real estate. That was the realization. It was hidden inside the expert of the world's, quote, most pessimistic economist. If everybody agrees, even by different routes to get there, there's nobody left to disagree. If everybody is buying the same thing, we run out of people to sell it to. I walked back to my house. I said to my poor bride, we're selling it all. Sold all of our real estate, pulled out of the contract that we were under for this apartment. I didn't feel bad. There were bids waiting in the wings. And over the course of the next couple of years, enjoyed an incredible privilege while the housing market absolutely imploded. I turned to my clients and started cautioning them about the same thing. 2 of them left. I don't come to you for your economic forecasts and prognostications. I said, well, what do you come to me for? Didn't make much sense. But they were so heavily invested in the narrative needing to be true, they couldn't believe anything other than that. I refer to this as the absence of intellectual dynamism. Intellectual dynamism. Fast forward to July of 2007. Something caught my eye. The enhanced credit, fully leveraged securities fund, launched 12 months earlier by Bear Stearns, had gone to zero. July 17th, 2007. A $600 million fund went to zero. Nobody seemed concerned about it. It became clear to me that there was what was located entirely in the real estate space at the time was going to create systemic risk throughout the economy. By August of 2007, I wrote to my clients, I said, a new bear market is about to begin, and I expect it to be so large that a credit contraction will dissolve at least one major financial institution in the United States. I didn't know it would be Lehman Brothers, but that didn't matter. In August 20th of 2007, I moved to a fully short position. And I was horribly wrong for 6 weeks. October 14th, 2007, if there's data geeks out here, make a note of that date. Go to the news on October 14th, 2007, and see if you can notice anything meaningful about that date. I'll spare you a couple of hours. There's nothing. There's nothing important that happened in the news on October 14th, 2007. But that was the day that the world went from more buyers than sellers to more sellers than buyers. That was the peak in the Dow and the S&P. We live inside a giant auction system. On that day, there were more buyers than sellers. The very next day, more sellers than buyers. More sellers than buyers, prices fall. More buyers than sellers, prices rise. Over the course of the next 2 years, equity markets imploded 56% peak to valley, forming what we now refer to as the Great Financial Crisis.
We're at a time and place in our society, our culture, our economic and political system that is very unnerving for most people. We enjoy and have enjoyed a lot of stability in our lives for most of it. That doesn't mean that we don't go through challenges and ups and downs, but for the most part, we've seen relative stability, certainly in the U.S., in our economy, and even with back and forth politics, some market cycle changes, we've really had the benefit of a pretty long span, more than a decade, of pretty good times historically in this country. I think we'll look back at this last 40 years and say it's been really pretty darn good for most people. I'm not saying that things are going to get bad in the future, but I'm saying things are going to be different. Different doesn't have to be bad, but different is going to be challenging for a lot of people. For those particularly who don't take advantage of or really acknowledge the change that's happening, the change that will happen, and how our old way of thinking, whether it worked or not in the past, is going to also be tested in many ways. And I found this to be the case in my own life. When I look at my own life and going back in time, back to when I was much, much younger, really a young adult, coming out of college and then going to dental school, and certainly as we all did back in those days, we're excited about what life's going to be as young adults and becoming independent and starting businesses and families and all the things that we really worked hard to prepare ourselves for. And as we go through life, we find that a lot of those initial dreams and visions, they can be upended at times. Not forever, but upended, and it can become easy to become disillusioned and what happened and life's not fair and why me, right? A lot of those things. As I look back on my own life, I've learned to mine my own experiences, M-I-N-E, mine them, go back and take what's revealed to me. So many times we look for other answers in other people. We look for that easy button. Well, there's got to be some quicker way, some hack, right, to get through this period of time. And I'm not saying that those things aren't useful, but I think we take those things out of context many times. Again, looking for the easy button is tactical. It's taking tactical measures to try to fix a long-term problem. And tactical is like putting a Band-Aid on something. It's not probably going to fix a problem for the long term. It's a short-term solution, which means we just come back to the same problem again, maybe in a different guise, a different cloak, but it's the same problem. We've got to go upstream. Upstream meaning we've got to go more to concepts and principles and a general philosophy of life. And this is not easy to do. But where I found it easier to do and change my mindset, the way I think about life, is first and foremost, who do I surround myself with and what do I take in from an audio, visual standpoint? What am I listening to? What am I reading? What am I hearing? What am I putting myself into? And what people do I surround myself with? What I find in life that a lot of people get stuck is because they don't change their environment. We've always got to be changing our environment to some degree, sometimes more times than others. The people that we start out in life with, and I'm not talking about necessarily your family of origin, you can't change that, nor should you be thinking about changing your current relationships in your family, unless things are just really in disarray. I'm just saying, stick with where you are, have fortitude for those things. But other people, other influences, what am I talking about? I'm talking about who are your colleagues? Who do you run with? Who are the people you hang out with? And are they of like-minded character and values? So many times in life, people that we start out with in life, they're good people, and we maybe enjoy their collegiality and we enjoy their friendships. But at some point, everybody changes at a different time and a different pace. And I think we've got to be cognizant of the fact that we may outgrow, or maybe people outgrow us. Could be both ways, but we outgrow certain relationships. Doesn't mean we cast them aside forever, but being intentional about who we invest most of our time with and how we're doing that, right? Socially, recreationally, and from a standpoint of just the whole mastermind concept. Mastermind being, it could be two people, informal situation where we just have somebody, or maybe a small informal board of advisors that we find that can be very helpful when we're trying to make tough decisions or have hard discussions somewhere in our lives, personal or business or investments. It's all relevant. In my own life, and I think for probably most of you listening to this, we've taken on the rugged individualism of a John Wayne character, because that's what men are. I'm speaking both to men and women, because both genders are equally capable of strong leadership, no matter where you are in your life. So I'm speaking to both. But when I say John Wayne, I'm talking about that rugged character that, I can take it on. I've done everything so far in my life, really done it myself. I've worked hard. I'm willing to work hard. Okay, those are good characteristics, but the problem is running solo and not collaborating or finding synergy with other people, mentors, again, informal board of advisors, mastermind groups, whatever you're looking for. That can be a big mistake. And it took me a while to figure that out in my life, because I tried to do everything myself. And you can get yourself in deep, dark holes, both figuratively and really from a mental standpoint, emotional, if you don't have some tethering to other people that can, unlock and change the paradigm. And I've found that multiple times in my own life, going through the grave illnesses that my daughter, who thankfully today, this month, in fact, yesterday actually, she turned 32 years old. Amazing, because she went through in her life from a very, very young child, high-risk leukemia, then epileptic seizures, and a liver transplant by age 12. To me now, that's a blur back in our lives, but it was very, very difficult. Very difficult. And I really didn't have, or didn't maintain, probably my fault, I didn't maintain strong relationships where I was willing or able to be vulnerable with other, particularly men, with other men. For me, it would be other men, not women, but men that were a sound character that I could reach out to. I just didn't want to do it. I didn't want to show weakness. I didn't want to show that I couldn't do it, because we all, as men, want to say, well, I can do this myself. I'm strong enough. Bad move on my part. Now, no regrets. We learn as we go through life. But I know in retrospect, probably if I'd been a little bit more intentional about the people I kept around me, and that could be 2 or 3 people. It's not a horde of people. It's just a few. To reach out to people when I was going through those tough times, that I would have been probably more emotionally available for my own family. Okay, lesson learned, right? Then there was the divorce. Another really, really tough time, because who signs up to get married and start a family and have a divorce? Well, none of us, right? I know it happens to 50% of the population, and maybe it's happened to you. Maybe you're going through something like that right now with some kind of relationship, a partnership, a marriage relationship, whatever it might be. That's tough. That's really, really tough, especially with kids are involved. It's extremely difficult. And once again, we don't want to share what's going through our minds and our heads, because, well, no one's going to understand me, and it's all on me, and I've just got to take care of it. Yeah, I got through it. And there were, at that point, maybe 1, maybe 2 people that actually kind of had my back, because I had sown those relationships previously. But learning to get through those times, and let me say this before I go too much further here, is that during those times that we go through that are difficult, whatever that difficulty may be, whatever the challenge may be, as hard as it may seem, God willing, you live to fight another day, which thankfully I have been able to do so, coming out on the other side, which usually takes more than a few months. Sometimes it takes a matter of a year or more. With my daughter's situation, it was a period of it was over 12 years of back and forth and health situations. With the divorce situation, again, that went on for at least a year and a half, and then there's the ramifications afterwards. So these things take a long time. Then I had my practice sale failure in around 2006, almost 20 years ago. First time I sold the practice, and again, that was a major setback, because that was not something I I intentionally designed, of course. Again, you go to sell something, you assume it's done and you move on, and that was not the case. Every time I went through these situations in life, and I've got many, many more. I could share a lot of situations that I've been in. Some very, very relatively significant, some less significant, but still equally outstanding in terms of the lessons that I learned. And here's the major lesson out of all these, is that coming out on the other side, persevering through, taking the lessons learned, and acknowledging those, whatever mistakes we made, judgment, poor decisions, no decisions sometimes, it's made me a better person. No question about it. It's taken my character from, a person who's always wanted to do good. I've always felt like I've been ethical and a person of integrity, but it's giving me better lessons in which I take these lessons. I've mined my experience of the past and say, what did I learn and how do I take this going forward? And I can tell you that I've become a better leader, a better father. In my life, I've been a better spouse to my wife today, a much better leader for the current wonderful team I get to run with and work with at Freedom Founders. It's been a blessing, but also it's part of the work product that I've become. And I hope that you will take what I'm saying to you today, these lessons learned, and rather than trying to find the easy button, the quick way out, or sometimes people just resolve to just try to bury everything and say, I'll never go back and do that again. Like I'll never get married again, or I'll never try another business, or I'll never try another investment out there in the world because I've been burned. Look, we're all going to be burned, and sometimes more than once. But if you do take this in stride, and then you surround yourself with the right people who are also willing and open and available to also talk about their scar tissue, because everybody has it. If someone doesn't talk about lessons they've learned and the hardships they've gone through, they're not real. Find those people who are willing to talk about those lessons, because those lessons of what we learned the hard way, to me, are much more valuable than everybody's big successes and big wins and social media and look at me and I'm so great. I think that's a really bad situation today, and so many people, I think, run into problems with depression and maybe the grass is greener syndrome by seeing all the stuff that's put out on social media, and it's not a good situation, especially for our young people today, who I think are very susceptible to what they see and hear, and I think we know the situation there with them. In terms of dealing with the current economy, we are definitely in changing times, and the old models that we got used to, whether you invested your money in 401ks or stock market or crypto or whatever you've done, not saying it's bad, it's certainly gotten you where you are, but going forward, it's going to be paramount. I'm going to say paramount that you find some ability, some way to connect yourself to gaining some additional experience, some knowledge and expertise in areas that probably you haven't done so today, up until now. Why? Because, well, you're busy. You're doing the things where your time is right now more urgent. Probably trying to spend more time with your family and your kids before the memories are gone, right? We've seen that happen to many, many people. And certainly trying to deal with your current business aspects. There's always something there going on, right? And it's just like there's almost too much to take in to learn one more thing. But I'm going to tell you, there's never a perfect time. There's never a perfect time to take the next steps that will advance you in your life and your business and your investments. It's what I call an inflection point. And these inflection points, opportunities come around only so many times during a lifetime. And if we push back like so many people do, like I've done in the past, and say, well, I'll get to it whenever I get XYZ done. Well, XYZ never gets done to the point where we feel like we can go ahead and take on something else. I understand that. The problem is we keep moving the goalposts, meaning that we keep saying, well, I've got to have more of this, more of that. And the things that we think we need more of, like more revenue and more EBITDA, we need the bigger house or whatever it may be, I'm telling you that those are usually the wrong markers. Not saying that those things are wrong, that you shouldn't be able to advance your life, but the markers we put out there so many times about when I get to here, then I'll do this. Either we never get there, or again, we move those those goalposts. We move them, not, I think sometimes unintentionally, but sometimes we're self-sabotaging. The way I keep myself straight in life, as straight as I can, is by surrounding myself with other people. Now, this is where mentorship comes into play. And again, I didn't really understand mentorship. I certainly had some people in my life early on that, looking back today, they were mentors. And I acknowledged what they sowed into my life early on in my life. And now I intentionally, today and for the last decade plus, I have really sought out people. Well, actually, it goes back to when I was in my 20s. I was seeking out people that would help me understand the world better, understand investing better, understanding being someone who was going to be different, and not different in a bad way, but contrarian, to be independent, to be a bit of a renegade, which I am. I don't follow the crowd. I don't follow the herd. I never have in my life. I've always been, outside the quote normal environment of what people say. Well, this is how you do it. This is why you do it. Just going back to when I bought, with my dad's help, my first rental property when I was in my first year of dental school. Well, who else was doing that? Look, I'm not saying I'm so special, but that's what I'm saying. I've just been different. And being willing to be different, I think in this day and age, goes such a long ways, but it's hard to do it because we want to be accepted. We want to think we're safe if we do what everybody else is doing. We feel safe in the crowd, the herd mentality. And I think that is just so wrong. If anything, you teach your kids, allow them to be unique in life. Allow them to take their skill sets, their affinity, what they're interested in, and let them be them instead of trying to force fit into the crowd. Fitting yourself into the crowd, what I call, being quote normal. I don't want to be normal in this day and age. I don't want to be normal. Doesn't mean I'm better than other people, but I want to think for myself. Having critical thinking, being discerning, being curious about everything, and also asking questions about everything is the key today. And I found my ability to do that has been empowered by placing myself around other people who have the same mindset. It's given me the ability to really be convicted about certain things. Not that I'm not open to other ideas. You have to be open and have your ideas tested. I always want people around me that will help test my ideas. Test them, and then find your lane. Find what you're convicted upon. Go that direction until you're not. Until something changes your opinion. But be open, be challenged, be willing to adapt and pivot. I think that's the key going forward. I wish you the greatest success in your life, where you are, where you're going. But remember, you've got to bet on yourself first. Bet on yourself first and surround yourself with the right resources, the right mindset, the right people, and you can be successful no matter what. I hope you gained some insight and perhaps some next steps for you to take as you endeavor to secure your financial future, especially in light of the market headwinds today. This time really is different. The path to financial security will look different today than it ever has. Whatever has worked to a point in the previous decades can no longer be relied upon to get you to where you want to go. If you'd like to explore these topics further, I recently released a brand new book titled, How Much Is Enough? It's a manifesto on the changing retirement model and how to create freedom and options in your life far sooner than the majority. I'm giving some copies away to my listeners. You can request your copy by going to freedomfounders.com/howmuchisenough. That's freedomfounders.com/howmuchisenough. Please be sure to subscribe to the show to stay up to date with future episodes. We have a great episode coming up next week featuring a conversation with the host of one of my favorite podcasts, one I listen to weekly. We'll be discussing the topic of building an intentional legacy, lessons learned from some of the world's wealthiest families. Don't miss it. Until then, thanks for listening to the Freedom Founders Podcast.